America's housing crisis is showing no signs of easing. There's a new report by Harvard University's Joint Housing Center that highlights some concerning trends in the market, and perhaps many of you are experiencing this already. Costs for homeowners have hit record highs. In 2024, the average monthly mortgage payment was $2,570, and as you see here, that is nearly triple, 3 times what it was 10 years ago. Chris Herbert is the managing director for Harvard's Joint Center for Housing Studies, and he joins us now from Lexington in Massachusetts to break down that data. 3 times as much. Chris, good morning to you. What does this report say about the future of the housing market? Many folks at home have already given up on looking.
Well, good morning, Errol. It's great to be with you. The future right now is not looking great in the sense that, as you point out, we're facing record unaffordability for home buyers. And if you look at the situation for renters, it's no better. A record number of renters are spending more than 30% of their income on housing, a level that is typically deemed to be cost burdened. So where do we go from here? It's simple but cruel math. The reason why we're in this problem is that the cost of housing, both producing and operating it, has gone up much faster than incomes. That's the cost of building materials, the cost of land, the cost of financing, and the cost of operating, property taxes, insurance. So how do we get out of it? Well, what we need to do is lean into how do we bring down the cost of housing to make it more affordable for people.
We know that a lot of people with low interest rates want to hang on to that as long as they can, so they're not leaving their homes, and there's been a supply shortage as well. So how can any of this be addressed so that people who want to purchase, especially for millennials and Gen Z, their first homes, can have assets and upward mobility, which housing typically provides?
It is a difficult time, particularly for first-time home buyers. So the number of homes sold last year was a 30-year low. And as you point out, a big piece of that is the fact that so many homeowners are sitting on low mortgage rates and have very little incentive to move. So what do we do for first-time home buyers? Again, I think what we do is we need to lean into different ways of making that housing that transaction more affordable, things like down payment assistance, things like interest rate incentives that can happen through state housing finance agencies and the like. But we also need to lean into how do we produce smaller, simpler housing. So that means single-family homes that are smaller and smaller lots, townhouses, and condos. And so I think part of it is local governments that need to make sure that their zoning allows for this higher density, smaller housing that will help give people an entry point for home ownership that's hard to get today.
I think that's a really interesting option. I know our Chris Van Cleave has done stories in Phoenix, for example, where they've built small standalone homes that are actually meant to be rented and never owned. What are some of the other creative ideas? Because the consequences if this is left unchecked is what exactly?
Well, the consequences are that we're going to have a whole generation of folks who are blocked from getting access to home ownership. They're not going to be able to build wealth that allows them to be able to keep moving up the housing ladder. What we're already seeing is the fact that entry-level home ownership has been so hard to attain. More and more upper-income renters, people are staying as renters. That's putting more pressure back on the rental market. So we do need to find a way to get people into home ownership to kind of free up the whole sequence of housing for people lower down the income spectrum as well.
Yeah, if viewers are watching this and they feel stressed out because of the unaffordability, at the very least, now they know they are not alone. Chris Herbert, great to chat with you today. Thanks for your time.
Dude, all right, so, all right, let's sit back and relax, right? Because one thing about the housing market is, yes, we always see confusion and we always see things that go up in price right now. Like we've been seeing interest rates, we've been seeing percentages, we've been seeing the prices of homes going up. But I'm gonna tell you right now, if you are trying to actually become a real estate investor, I'm just gonna be blunt, right? Yo, right now it's the time. I'm not gonna lie to you. Like right now, as we're in 2025, this is the time. This is the time to actually start getting into real estate. Like, there's a lot of people who are like one comment he said that you won't be able to build wealth. That is completely wrong. You are still going to be able to build wealth, even with the house market crashing down like this, or if they believe it's crashing down. Me personally, I mean, like, I really couldn't care about the housing market right now. And me, I'm an investor. Right? I mean, I still care, but the thing is, them saying, okay, yes, 7%, 8%, dude, I mean, I know some people who are closing on DSCR loans at like 10%. Joyful, happy. It's all how you kind of pick your poison at the end of the day. You're still going to be able to still build wealth with real estate investing. Now, mind you, it depends on the location of where you want to live. There's locations where you may want to live where we are actually seeing where houses are there used to be 300,000 are now touching for $400,000, $500,000, $600,000. And we see it in such a way where we are also seeing new developers as well. Mind you, there are also new developers that are also kind of building houses, right? And the price market is starting around like 300,000 to 400,000. Though they're townhomes or connected homes, right? But one thing is, I'm seeing how smaller and smaller the houses are getting, just a little bit, except for the townhomes. The townhomes are just getting just way taller. And I think some of them are starting off at like 500,000, and the APR, the interest rate is typically like 7. Like I want like a good interest rate right now, if you're very lucky, like first time home buyer, you could possibly get between 7.1, 7.5% right now. And today's June. We're in June 2025. Well, sorry, I'm basing off January 2025. Maybe it's probably still the same thing to right now in June. And we are seeing some dipping into like the sixes. I am seeing like one of my friends, he closed on a deal that was in like 6.8%, 6.5% interest rate. But guys, do not let if you as a new investor, right? If you actually want to get into real estate, I'm just telling you right now, don't worry about the house market crashing. Don't worry about the house market and all these uncertainties. Just don't. It's going to cause you a headache. All you need to do right now is go out there, buy your first rental property, and start scaling. I'm telling you, you go in there, buy your first rental property, do your analyzation, figure out how you want to scale your rental property. But before you actually buy your first rental property, make sure you actually have a strategy, right? Just don't go in there just, oh, I'm just buying my first rental property. No, make sure you actually have a good strategy, right? And ask yourself, why exactly do you want to start real estate first before you start jumping in? Don't sit and be like, oh, I just want to get real estate. I want to get money. No. Ask yourself exactly why do you want to start getting into real estate first, and don't fear about all this house market. Right now, I'm telling you, it's the best market. I'm just gonna be honest with you. It's the best market. Me personally, if I can't get a home at 3%, 4%, how it was back in the day, not gonna lie to you, I couldn't care less. As long as my cash flow still makes sense, I couldn't care. I'm just smile to the bank every single day. But guys, other than that, please make sure you like, subscribe. I'm gonna catch you on the next one. Peace.